Barks Alpha here, reporting for Newshound from the Mae Ya waterfall in Thailand with your 24-hour crypto news roundup. On today's bulletin, quantum threat sparks, corporate takeover debate. The SEC announced Project Crypto initiative. Virginia state lawmakers propose strict crypto ATM regulations. The Netherlands push 36% capital gains tax. And Hoskinson hints at Cardano and XRPL integration. Let's dig. A recent industry assessment has reignited the conversation regarding the long-term threat quantum computing poses to Bitcoin. According to Cointelegraph, venture capitalist Nick Carter has highlighted a critical political risk alongside the technical one, arguing that Bitcoin developers must address quantum vulnerabilities rapidly to prevent a potential corporate takeover. Carter suggests that if the developer community fails to provide a timely solution, centralized financial institutions could step in to offer their own, which could threaten Bitcoin's decentralized nature. While current quantum capabilities remain insufficient to break the encryption securing most digital wallets, the report emphasizes that the window for implementing post-quantum cryptography, PQC, is narrowing. By standardizing resistant protocols now, the ecosystem can transition to a quantum-secure state via community-led development, as opposed to institutional players. Speaking of which, the Securities and Exchange Commission has unveiled a new initiative titled Project Crypto, signaling a fundamental shift away from its long-standing regulation by enforcement approach. The project aims to replace sporadic legal actions with a definitive set of rules for classifying and trading digital assets within the United States. By providing structured regulation, the agency intends to offer the clarity that some market participants have requested for years, potentially ending the cycle of protracted litigation between the Commission and major industry players. If successful, Project Crypto could mark the start of a new chapter between federal regulators and the digital asset industry, while encouraging traditional financial institutions to deepen their involvement in the ecosystem. This leads us nicely into our next story, where legislators in Virginia have introduced a new bill aimed at establishing comprehensive oversight for cryptocurrency kiosks and ATMs operating within the state. The proposed legislation includes specific consumer protection mandates, such as clear warnings about transaction risks and limits on daily transfer volumes. Additionally, the bill outlines rigorous Know Your Customer requirements in order to bring kiosk operations in line with standards used by the legacy banking sector. And in news coming out of Europe, Dutch legislators have moved forward with a proposal to implement a 36% capital gains tax on cryptocurrency holdings. The new structure is designed to replace the previous wealth tax model, which was based on estimated returns, with a more direct levy on actual realized gains. This legislative push reflects a broader European effort to standardize the taxation of virtual assets and ensure they are treated similarly to traditional financial instruments. Under the proposed rules, investors would be required to track and report profit or loss for every transaction, a requirement that has prompted discussions regarding the complexity of compliance. Proponents of the bill argue that the high rate is necessary to prevent tax evasion and generate revenue for public services as the digital economy matures. Conversely, critics warn that a 36% rate could stifle local innovation and drive capital toward more tax-friendly jurisdictions. Last up, Charles Hoskinson has initiated discussions regarding a potential technical integration between Cardano and the XRP ledger, aiming to enhance decentralized finance capabilities across both ecosystems. The proposal centers on bridging the networks to allow for the seamless flow of liquidity and assets, potentially creating a unified infrastructure for cross-chain financial applications. By combining Cardano's smart contract functionality with the high-speed settlement and liquidity of the XRP ledger, the initiative seeks to establish a more robust alternative to existing interoperability solutions. If realized, this collaboration could signal a major shift toward a more interconnected blockchain landscape, where major protocols focus on shared liquidity and cooperative development rather than isolated ecosystem growth. That's it for today, dogs. Remember to share with the pack, keep your noses to the ground, and your ears pricked so you never miss a beat. Reporting for Newshound, this is Barks Alpha. Yes, I do.